All right, guys, good morning. Welcome back to the weekly, excuse me. Welcome back to the weekly analysis where I go over what is expected, what I'm expecting on the US30, and it's also applicable to the NAS100. So before we begin, let's just pray. God, we just give you thanks and praise for another opportunity to trade, another trading week. Pray that you'll beat anyone watching this video. May it be instrumental in helping them to develop a strategy, and may we all succeed together. We thank you and we love you. Amen. All right. Excuse me. All right, guys. So if you have not had a chance to watch last week's review, just pause this video, go right back to the YouTube videos, and you'll be able to see the review where I broke down how the market actually played out in relation to the analysis for last week. Those of you who are familiar with the channel or new to the channel know this is how I draw my lines. My blue lines are my weekly boundaries, and my green lines are my daily boundaries. I'm primarily looking at the US30. However, the information is still applicable to all US indices. And also my bias is 100% bias, 100% bullish for US indices. So where did we end last week? Well, last week, Friday, we saw that we ended with a new high, which is a new breaking structure on the 1 and the 2-hour time frame. Again, what you need to see for a trend continuation is you first need to see a new high, and then you also need to see that continuing to make the confirmation higher low, and then you start to see higher highs. Now, the interesting thing about where the market ended on Friday, of course, we know Mondays, Tuesdays, and sometimes Wednesdays, the market goes into consolidation mode. So it takes Mondays, Tuesdays, sometimes Wednesdays to retrace, consolidate. It displays bouts of volatility before actually moving towards the move of the week. Now, the interesting thing about this week is that the monthly candle ended on Friday. The daily candle ended on Friday. The weekly candle ended on Friday. And everything below ended on Friday at 5 p.m. Okay. Now, it's not very often that you get so many candles finishing all at once, which means you have some amount of confluence. It's a fresh start for the month of November. And what you will see is that push towards, another series of all-time highs going into the last 2 months of the year. Now, a couple of things that I want to point out for you this week is, as you know, I'm heavy on technical analysis. The market is a technical instrument. It only trades highs and lows. That's all it does. So the main thing here in the indices is that you want to actually stress heavily on the technical analysis. A lot of people focus on fundamentals, and what fundamentals tend to do is that they drive a lot of volatility into the market. So you'll find people reacting a lot to news. You'll find people reacting to different tweets that come out from time to time. And that only drives fear and volatility within the markets. Take a step back, look at what the market is doing, analyze your time frames before you actually make your next move. Now, here's something that I want to point out. So, for example, if you look at this seasonal data right here, and I'm just going to bring it up on my screen so you can see it. Now, with the seasonal data, remember the 0% line is where the market starts every single year. Okay. And then, of course, if it's below that, then of course, you know the market is bearish. If it's above that, then of course, you know the market is bullish. Now, I use the term bearish loosely because, like I mentioned to you, the indices are 100% bullish. Any bearish activity that you see on the indices is only a temporary retracement in order to create a higher low on your larger time frames. Okay. Now, the reason I brought up the seasonal data is that you'll notice that every single time that the market breaks above the 0% line, it tends to actually finish the year on a bullish note. Okay, so let's just close this up so we can go from, let's say, 2023. Okay, 2023. This is where we are. Notice consolidated around the line early in the year, broke below around about April, March, thereabout. And then once it broke above this line, it typically ended above this line for, well, it definitely ended above that line for the end of the year. Okay. Now, the other thing that you will notice, now you will not see this particular graph on the NAS100. You only see it on US30. But when you look at the technicals, okay, so if you look at the technical data, you'll see right now, the market is actually, based on moving averages, is in a strong buying momentum. Oscillators show that it's selling. Now, the oscillators tend to actually align more with your smaller time frames. And remember, I mentioned to you that on your smaller time frames, you will definitely see breaking structures. It will show you that the market is making lower highs, lower lows, when in fact it's only making a higher low on a larger time frame. Okay, hence why you see this information reflected on your moving averages. Now, I've also mentioned to you that I do not use indicators as predictors. These just confirm what my bias has been. They just give me greater confirmation to know that, okay, fine, you can still hold your trade. The market is still going according to your analysis. So I don't use them as predictors. So I'm not looking at this to say, okay, yes, the market is selling. Yes, the market is buying. No, this just confirms my bias, which I've always said to you, that the NASDAQ 100, the US30, are 100% bullish instruments, which means that they trade from the largest higher lows and terminate on the largest highs or the all-time high. All right. So let's get out of this real quick. So if I close this out, another thing that I want to actually show you, so I'm going to bring this chart up. And what I did was I did an analysis of the last 3 years on the NASDAQ 100, which is to basically show you that the market is 100% bullish. 100% bullish, guys. I don't know how much to stress this again. What I have here, these lines right here, are the activity that happened on the daily time frame for the last 2 years and into the current year. So for example, this was all of 2023. Notice the market came, it made its lows, consolidated for a little bit before breaking out in 2024, and we're having a super high year in 2024. In 2025, notice he had this hard retracement early in the year, which a lot of people are thinking, oh yes, this market is going to be selling. This market is going to be bearish. No, guys, it's not. Any sells that you see on your time frames, on your smaller time frames, are going to be only the higher lows on your larger time frames. Now remember, every time frame is considered a smaller time frame as long as you have a time frame that's larger than it. So, for example, this is the day. So we saw here, and I'm just going to mark these points just for emphasis right here, the lowest points. So if I use this tool right here, this was the lowest point of 2023. This here was the lowest point for 2024. Let's see, lowest point for 2024. And then, of course, this was the lowest point for 2025. All right. Now, let's look at a number of things. Let's look how this is in relation to the monthly time frame and the weekly time frame, because of course those two time frames are larger than the current daily time frame that I'm on. Remember, when you zoom out, you see a greater picture of what the market is doing. So let's go here. So let's start with 2023. So if we look at the weekly time frame, The lowest point that was made here, okay, was a higher low on the weekly time frame. Okay, this is in 2023. In 2024, the lowest point that was made here was another higher low, okay, on the weekly time frame. When you go to this year, the highest point that was made right here was actually a new low, which signaled a breaking structure, temporary breaking structure, all that it was. Because of course, as soon as it broke structure here in April, I think or March of this year, April or March of this year, it went right back and broke back in structure towards another all-time, breaking the all-time. Yeah. Okay. Well, let's jump up. Let's look at the monthly. So the monthly was actually coming from a higher low the previous year. This was actually in 2022. Notice it came here. It did some consolidation on the monthly. Okay. But the higher low actually remained and pushed all the way up to the higher highs. So for 2 years, you had this bullish momentum going all the way up. When you had that retracement, it came and it broke. So this higher low that we saw on the weekly time frame, which was here, sorry, this low that we saw on the weekly time frame, new low, was only a higher low on the monthly time frame. Okay. And for the past 9 months or so, 1, 2, 3, 4, 5, 6, 7, sorry, 7 months. Okay. Market has been buying from this higher low that was created back in April of this year. Okay. So I just wanted to take some time to actually, zoom out to show you exactly what's happening. And this is how you're supposed to do your analysis, guys. Look at your larger time frames to get a sense of what the market is doing, and then all your time frames should trade according to that bias. And that is why I say to you guys, don't take sells on the market. The only time I really take sells, of course, is if the setup is grand. Like, for example, from this higher high right here would be a great opportunity to sell. However, you know what? Like I've always said to you, any sells in the market, because they're only there to produce the next higher low, and I know that the lows are always going to fall higher, I don't chase the sells. It's easy for me to wait for the sell to be over, take my profit with a good position, do not over leverage, and just wait. I just weather the storm and just wait, because the market is always going to go high. All right. So that was just a little thing to just put it in perspective so you could understand what it is that I'm doing. So let's get back to this week. So this upcoming week, again, more of the same. I'm not expecting this market to do any kind of long-term selling. Any selling that the market is doing is only going to be a temporary retracement towards the next higher low. So if you look at what I have here on the screen, this is last week. This is the week before. This is the previous week. This here is the week before, the week before, the week before. Now, if you zoom all the way out, this is the week of July 16, 2025, thereabout, okay? Now, if you look at what happens from July, after you had this July, if it came in here, you notice it went up, it made that all-time high, because at that point, this was the highest point. Okay, so you'd have taken your profits, and then you waited. Got in, taking your profits, waited. Same thing. That's all that the market does every single solid week. Okay, so now I'm on the 2 hour. And we can jump down to the 1 hour, we can see exactly what's happening. So last week, this was last week's low. Okay, this was the 1 hour support that was created last week. Okay, look at what happened. Market bought up, even with all the selling that went on last week. Okay, it still closed higher than the previous week. Okay, let's look at last week. Okay, the lowest point was here. Okay, this is where it started. Came up with all the selling. Okay, it still closed above the weekly high, above the previous week, because the previous week's low was here. Okay, here's an exception to the rule. However, this exception only applies to the 1 hour because remember, you have larger time frames which are showing a completely different structure. Okay. So for example, you notice here you had a hard retracement. This is where everybody got excited. Some people actually mentioned that they were going to be holding sells for the remainder of the year. Well, good luck with that. Let me know how that works out for you when the year ends. Okay. Market came, did this hard sell, gapped up over 7,000% on the next day, which is the Monday after. You had deep consolidation, great consolidation. However, it did not break the previous week's low. Okay. So you notice that the market actually keeps going up. Now I mentioned to you guys that every time when you see the market sell, it's always going to be a retracement to make the largest higher low. So with all of these great sells, once you look to your left, you'll notice that the market has been 100% bullish for all time. So even with those, so if you got in on this entry right here, you could have been in this trade forever, even until now. With all these sells, you'd still be in profit. Okay. So the reason why I'm stressing this, guys, is because it works 100% of the times. Now, I mentioned in some of my posts last week that if you go in on a trade and you take a higher low and you realize that the market came back and broke that higher low that you entered on, it simply means that it was not the largest higher low that you entered on. There's always a time frame above that needed a higher low to be fulfilled. So that's why it's important that when you take your trades on, especially on a higher low, this is a consolidation point. If the market goes up and makes a lower high, you take your profits and you wait. And what are you waiting for? Your next higher low. All right. Now, if you watch the video from last week, you notice that I went through and I showed you how every single buy was made last week. Okay. You had a total of 1, 2, 3, 4, 5, 6 buying opportunities, right? Last week. 6 clean buying opportunities. Okay. And by clean opportunities, I meant that once you took that higher low, it terminated on some sort of high. All right. Quickly, let's do it again. This was Monday. This was Tuesday. So Monday, bought here, exited here. That's a higher high. Take your profits, wait. Higher low, enter. Higher high, take your profits, wait. Higher low, enter. Higher high, take your profits, wait. Came down, it made a low, which is a higher low on the larger time frame, starting on the 4 hour, made a higher low, went up, made a lower high this time. Guess what? Still take your profits and you wait. Came down, made a higher low, enter, went up, take your profits only on a lower high, you wait. Came down, it made a lower low this time, which is still that higher low that was made on the 4 hour. Now it extended all the way to the 20-hour time frame. For those who have those time frames, you enter here, came up here, you can take your profits and you wait. Or because you know the trend is actually going up, all right? And because you know that when you look at like a time frame like the 3 hour, the 3 hour is still at a higher low. Guess what? It has not terminated as yet. So you know that this trade is still valid. Once you look at your larger time frames and you see them still respecting those higher lows, you still hold that trade until you get your all-time high or you get a lower. So for this week, what am I expecting? Again, like I mentioned to you, the 2 hours, the 1 hour and the 2 hour, they came up. They had the first breaking structure. This was 3 o'clock on Friday, 3 o'clock on the 2 hour, and this was the 3 o'clock on the 1 hour. However, you will notice, and this is the key here, you will notice that although this was the high on Friday, you notice this was not the last candle of the day, which means you had another candle afterwards, which is the 4 p.m. candle, okay? This 4 p.m. candle actually translated to a higher low on some of your smaller time frames. Now, remember, you're not analyzing on your smaller time frames. However, you already know that your 3-hour is at a higher low time frame. So when I go to a time frame like my 15-minute, I see that it's at a breaking structure point, which means it's coming from this low. It signals that it wants to break structure to go higher. Not only that, it broke a previous higher high. Okay, and it's showing you that it wants to continue to break structure. Now, you look at your 5-minute. Notice your 5-minute actually ended here on a higher low. Okay. Then it pushed up and it was at a lower high. Okay. Now, at this point in time, when you're looking at your markets for next week, you see here that everything has broken structure from your 1 minute all the way up until your 5-minute has broken structure with a new high. You got your confirmation higher low. Now you're expecting a higher high. Okay. But because you're not doing this analysis on your small time frame, jump up. Let's look at your larger time frames, like your 1 hour and your 2 hour. Here we go. You have a confirmed lower high sequence right here. So you have higher high to low, which says I want to break structure. I have broken structure. Now I need confirmation. So it came up, it made a lower high. Okay. But notice what it did. It came back down and says, oops, I'm not ready to go down to make that lower low as you. So you made another higher low. Came up. Now you want to make a new high by breaking this previous lower high. But the market says, hey, I'm still consolidating. So it gave you another lower high. Okay. Well, from that lower high, you actually came down and you confirmed this lower low, which was the previous breaking structure right here. But the key to this breaking structure, stay with me, key to this breaking structure was because it happened off of this 2 consolidation points right here, it only formed that higher low on your larger time frame. So although you have this break in structure here on your 1 and your 2 hour time frames, okay, with this lower low, guess what? When you go up to a time frame like your 4 hour, for example, it still only shows a higher low. If you go all the way up to your 20-hour time frame, it still only shows a higher low. So which means that temporary breaking structure that you saw on your 1 and your 2 hour confirms the analysis and confirms my bias that really the smaller time frames will break structure only to show me that it's still in structure on my larger time frames. And that is why I'm holding this trade with confidence, because I'm expecting the price to actually go up, break this previous point, this previous all-time high, and continue all the way up to my 61.8%, which is going to be one of my ultimate time take profits. All right. So in closing this video, what I want to mention to you, what I'm expecting to see at the market open, number of factors, because we're in the consolidation zone, and because we actually have a new high being signaled here off of this lower high that was previously done. Okay, number of things can happen. A lot of people are expecting a gap down. Any gap down is only going to be temporary. It's only going to still confirm that higher low that you're seeing on your 4 hour. Because in order for your 4 hour to break structure, it would have to come all the way down here to 46,453.9. Okay? The chances of that happening, very slim to none, because you still have a market that's 100% bullish. And if you look at all of these candles that have formed over the last week, clearly hints of consolidation on the upper level of things. Okay? All right. So a lot of people are expecting to see a gap, when the market opens towards the downside. For me, I'm expecting to see a gap towards the upside. That's what I'm looking for. I'm looking to see that gap towards the upside to confirm the fact that the market is still making higher lows to higher highs. So expect that this previous all-time high level is going to be taken out. All right, this previous all-time high level at let's see, get it right, 48087.6. That's going to be taken out. And I think based on what I'm seeing, based on the analysis, I'm guaranteeing you and I'm telling you that this level right here, 49430.3, will be broken. All right, there's no questions about it. So that's my analysis for the week. Expecting more higher lows to higher highs. Nothing has changed. The market still remains consistent. The market still shows you its hand, what it's doing. You are the one that has to make the adjustments to ensure that you are trading the right things and going with the trend at all times. So guys, thank you again for watching. And God, thank you again for your blessing and for your goodness. Pray that you help us to continue to be consistent, successful at everything that we do. We thank you and we love you. In Jesus' name, amen. All right, guys, take care. Have a wonderful week and happy trading.